What happened in the first quarter of 2019 that nobody saw coming? And remembering an investment icon. That's what this video is about. Hi, I'm Dan Lohmeyer, CFP professional and a registered life planner with United Wealth Management, where we specialize in peer management and financial life planning for pilots at United Airlines. So what happened in the stock markets in the first quarter of 2019 that nobody saw coming? The bounce back. From the low on December 24th to the close yesterday, April 3rd, the S&P has bounced back 22%. Why did nobody see this coming? Because we nor anyone ever sees it coming, and that's the point. Go back to the end of 2018 when on December 24th, the market was 20% off its September 20th high of 29.34. In only 3 short months, we'd seen a 20% correction in the S&P 500, a very steep drop. And not only that, it was accelerating downward in the 3 weeks leading down to the December 24th bottom. What did the headlines say at the time? CNN said 2018 was the worst for stocks in 10 years. CNBC said the worst start for December for the stock market since the Great Depression. And as irrelevant as that statement is, they have to reference the Great Depression to make it sound really bad. Bad press makes good copy. MarketWatch said the U.S. stocks logged the worst year since 2008. Nothing here but gloom and doom, and the implication is it's not a good time to be invested in equities. Yet December 24th was the bottom of a 22% advance. But this is the point. Recoveries and declines are never expected. The media can only report what the market has done and can never report what the market's going to do. Of course, nobody can do that. This up and down ride, my friends, and the usual media hysteria that accompanies it is business as usual and is a perfect example of why we do what we do. Holding our portfolios through thick and thin, something that many investors have a hard time doing. For this reason, our guidance remains the same. Do what most investors do not have the fortitude to endure, which is continue investing in a globally diversified portfolio of high-quality mutual funds regardless of the headlines or recent performance. This is what the evidence suggests, and this is what we stick to. In so many cases, it is easier said than done. Speaking of the evidence, one of the strategies we use based upon the evidence is to tilt our portfolios towards smaller, value-priced, and more profitable companies. The data suggests a higher expected return from a portfolio tilted this way versus one that is not. We implement this strategy within the DFA mutual funds that we use. And while we expect this to play out over time, the evidence also indicates that it does not play out over every individual period. Alan and I did a live webinar in February where we addressed this relative performance. If you'd like to see the replay, and it provides some very good information, the link will be in the show notes below. One final note as we reflect on this past quarter is we mourn the loss of one of our greatest allies on the front of evidence-based investing, Jack Bogle, the founder of Vanguard and the father of the first publicly traded index fund. Jack professed many profound investment lessons during his lifetime, and in the face of the drop that we had seen at the end of last year, followed by the recent recovery, no lesson is more appropriate than when he would say, "Don't just do something, stand there." These are words to invest by. In our world of the 24/7 news cycle and the natural human inclination to react at a moment's notice, if holding a globally diversified portfolio of high-quality investments through all market conditions were easy, then everyone would do it. Jack would also say that the stock market is the most efficient mechanism on earth for transferring wealth from those who have no patience to those who do. We believe that the personal quality of patience is so important that we write it into every one of our clients' investment policy statements. I'm Dan Lohmeyer, CFP professional and a registered life planner with United Wealth Management. Until next time, don't just do something, stand there.